Good morning, everyone. Welcome to the On Time, On Target Morning Brief. We're going to talk today about Netflix. If you've watched in the news, they missed earnings yesterday or last night, and the stock is selling off, I think, currently down 8 to 10% or so. The big headline being the reduced number of subscribers. And, you kind of have to think, it's unbelievable that Netflix, such a powerhouse, would ever miss their targets, but they did. You can think of it as kind of a reversal of they went up big during COVID. Obviously, we're locked at home. Again, subscribers are going to go through the roof during that time. So, is this simply a mathematical reset of the opening economy? Or is it now that other companies out there like Amazon Prime, Disney Plus have now become almost to the parity level as far as content? And then this would mark the end of Netflix. I'll give you my 2 cents, but that's what we're going to talk about today. I'll talk about which of those three stocks that I like and in what order I like those stocks. So that's our topic for today. If you're catching us on replay, thank you for subscribing. Make sure you hit the notification bell so you know when this gets uploaded every day. And if you want to join us live, what you don't see is a Q&A window and a chat window. And in my chat window, I have my longs and shorts of the day as well as the investing topics. And with that, let's go ahead and get started. All right, welcome back, everyone. Here's our lineup card for the day. Make sure you have your Q&A window and your chat window set up appropriately. Standard disclaimer applies. Make sure you do your own due diligence before acting upon anything in this financial education presentation. Full disclaimer information is available at ototnow.com. All right, welcome to today. Wednesday, April 21st out there. Mission objectives today: grow our money, protect our money, and live off our money. Today, it's more of I would say almost a protect our money as we talk about one of the original FANG stocks. So you think FANG acronym that was popular several years ago, still used today, of the Facebook, Amazon, Netflix, and Google. And again, there's been several versions of that, an extra A, for Apple, whatever. But Netflix has been one of the FANG stocks that has grown to become a huge company out there because of the subscriber base. And it is the only FANG stock that is negative for 2021. So we're also going to talk about the market today. A couple of folks have hit me up in the past day with, what's wrong with the market? Why is the market crashing? Zoom out a little bit, 3 of the last 19 days have been red. The other 16 have been green. So, I mean, the market's not crashing. It's all a mathematical reset. But, we'll talk about that here in a second. Then we'll talk about what are preferred stocks. I do not use these a lot, but I have to start looking at them now. There will be a point where we're going to need to the tailwinds we've talked about for this year for 2021. Stimulus bill, check. We've got that infrastructure bill, not complete yet. Again, we've got several months to argue about it, but they say July 4th, trying to get something out there. I think that will happen. I do not think, we'll argue about the details, but I think something will get passed. You've got the, COVID dying off, so not dying off, but being mitigated, and the economy opening. All those three are tailwinds. The headwind is tax reform. So as we get into that potential headwind for later on, I do have to start looking at things differently than I have in the past, and preferred stocks is one of them. So we're going to talk about what those are today, so if those start showing up in your portfolio. So we're at the not yet, but we certainly want to have all of our homework done and our due diligence done, so we're ready to move quickly into these if we need to, if we need to protect our money using them. All right, the flow for the day: long, short, open, short, long. We're going to go the market review around the world, pretty much in the red across the board, slightly in the red here in the U.S. excuse me, headline review here is a bunch of earnings that are out. So we'll go through those. Long-term investments, again, we'll look at Netflix, Amazon, and Disney, which ones I like, which ones I don't, and in what order. We get into short-term execution. I do not like any of the longs and shorts for today. None of them really fit perfectly and carry a long storyline. So I've got them loaded up in the chat there. Let me hit it again for the somebody just showed up. So there's the long and the short. Not in love with any of these. So, it's not quite a dart throw, but there's not that just, very strong theme out there that I like, but we'll do our best. Contingencies and academic resources are standard. All right, let's go over to TD Ameritrade Think Pipes. So again, long and short, that's what I have. ISRG beat earnings. It's Intuitive Surgical. I like that company. So, that long is probably what I'm going to take today for the trade. Note the price point of $844. So, you're taking a share or 2 or 10 or 20, not your normal 300 or 3,000, depending on how big of a bat you're swinging out there. So be careful, look at that before you hop into a trade. MIDD, I'm not familiar with them, but they are part of a merger. And then Marathon, it's Marathon what? Marathon MARA. Marathon Digital Holdings is what that is. That is selling off as well. All right, let's take a look about this market that, Tex, what's going on with the market? Why is the market so stupid? Why is it crashing? Well, okay, kids, come on now. Again, I don't draw these. These are electrically drawn, but that up channel is new. So we've had, if I counted those back 19 days, we've had 3 red candlesticks. So mature yourself a little bit and zoom out before you start griping about things. B, I went back to the beginning of 2020. You were up 11.47% since the beginning of 2021. Excuse me. I think I misspoke there. Hey, you're up 11% a year that was kind of projected to be flattish, and we're not even a fourth through the year. So we're on pace for, 30 some percent. Obviously, I don't think that's going to happen. But there is more upside as the economy opens. But let's not be too greedy and think that this little mathematical reset here is anything noteworthy. It's normal. Would a 10% correction here or 10% move down here be normal? Yeah, it'd be normal. You wouldn't like it. Sure, 420 down here into 380 or so. Plenty normal if it happens. And it doesn't even need to necessarily have a driver. It could simply happen just due to math. So don't sweat this move down. We haven't had a 3-day down period in a while, so probably find it on here. It looks like right here, but they do happen, a few times. So don't sweat it if it does. I don't think the world is ending. There's literally no headlines out there that I think point to the world ending, but you never know. Keep an eye on it every day. All right, as we focus in a little bit on the SPY and the 5-day, so you can kind of see where that's Lily. Don't look at that. Excuse me, that's the SPY. Yeah, so yeah, that's a good one. Somebody said, what's wrong with the market? I was like, this market? I don't know, pretty good looking market to me. But focus in on the 5-day. Here's what they were focusing on is, grouchy week and boom, 2 down days and a little bit of, down slightly going into the open. So not worried about it. That's why we talk about it every day to keep things in perspective. Okay, let's go over and take a look at some headlines and our futures on the day. So refresh this real quick for you. Okay, so barely in the red there. I see some stuff showing up in the chat. Yeah, I subscribe to pretty much all of these too. HBO Max, yep. It seems like it's all tied together. I have no idea what I pay, and I don't mean to be obnoxious there, but I do enjoy, like, I'm at that point in my life I can pay for all the content. I have no problem with that. So yeah, Amazon Prime, I like it. All right, so let's go back to the around the world here. So futures in the red. Let's see, Europe is mixed. Heineken up 4%. Didn't see that earlier. All right, pretty big red number in Japan. Pandemic concerns appears to be the headline there. Here's our numbers from yesterday. Again, red, but not notable in the big picture. 10-year, remember, it was up above 1.7, going to 1.8. Hyperinflation was here. Buy gold, silver, and Bitcoin. Okay. that's off the scope, right? We're down below 1.6 again, so everybody can take a deep breath about their hyperinflation. Trillion here, trillion there. Eventually, it shows it's going to be real money. I know, I got it, but not too worried about that. Yeah, I don't know. I'm not shopping for boxers. It's funny. The comment there is makes me want to buy these boxers, but I mean, they do look comfortable. Floating on air, that is nice. Yeah, I don't know where the targeted ad comes from there, but you know. All right, gold and silver up fractionally, and then Bitcoin up at 55. Remember, it had sold off. It's back up to almost near its near high or its highs. So not worried about there. All right, let's get rid of the underwear on our screen and move into the headlines here. There's Netflix shares tank, so again down 8 to 10% or so. Q1 miss, including a top, says the stock is dead money. So let's get into that a little bit with the let's look at the other headlines real quick. See if there's anything. Obviously, everybody's been following the George Floyd, Derek Chauvin murder case. That came out yesterday. So there's going to be a lot of, I think it'll be, politicized to the highest level outside of the fact of that situation being how you could see a lot of that dominating the news cycle today. Mortgage demand jumps after interest rates fall to a 2-month low. Okay, gosh. Hyperinflation actually not here after all. Could plunge 50%. Yep, it could. It's probably not going to. That's my bet, is it just goes higher from increased demand. The Super League thing seems to have, for the soccer league, has been just looks like it's not only it's going to bomb, and they're going to wish they'd never brought it up. That's my take on it. All right, Coinbase has a buy rating. Of the 5 days it's been open, it's been down 4 of the 5. So a little bit of a house of pain when you buy into something like Coinbase. So it's a long-term hold. You have to at least wait for the first earnings to come out, but at least they got an upgrade here. That should put a bottom in it. I think it holds 300 today. All right, back to Netflix. We'll pull the chart here. So here's kind of the thesis, and I think a lot of us that are kind of the target dynamic for this show probably have all of these things, and probably, like I said earlier, don't know what we have. And I don't mean to, come off as arrogant there. But I do think that's the case for a lot of the kind of the upper middle class households. Obviously, not the case for everybody. But so will the crowd I just described probably always subscribe to Netflix? I think so, probably for the rest of my life, honestly. Now the other one's Amazon Prime. We get it with, it's packaged with some other stuff, and then Disney Plus, and then Apple as well. I think those are great programs. They bring a lot of content to you for a pretty reasonable price. Again, if you can afford it, I totally get that. So Netflix by itself, what my biggest concern here is it doesn't have another way to win. So when you look at stocks, I do like, that highly addictive product, high margin with a moat, right? So highly addictive product, Netflix and chill, you bet, nailed it. Moat, not so much. High margin, used to be, yeah, but now with content, so many, COVID affected content production, right? So there's less content, and I think that the margins aren't as high as they were. So I think the content producers are commanding higher prices as the field's becoming leveled. So I'm not an investor of Netflix here. I want other ways to win. Amazon has a few other things going on than Amazon Prime. Right? Like a kabillion things. So does Apple. So does Disney, would be the other one I would throw out there. We have the theme parks. Obviously, as we're hit, the reopening trade is going to be huge for theme parks as people try to get out and, take our kids to the dream world, right? That is Disney, and you kind of have to go. In the chat there, I don't know if Netflix goes international. I would imagine that they do. That's a guess. I don't know. And yeah, there is some international content on there, but I don't know if all of the content providers have it. That's not really my wheelhouse, so I don't know particularly. But when you look at, Netflix compared to an Amazon, I would say Amazon's my number one. I promise you a hierarchy. Amazon's my number one. It's come up pretty heavy since 3,000 here. Just got a nice price target move up to 4,000 as well. And then I would say the next is Disney. When you look at this, this has been all over the reopening trade, right? Since the election, it's just like, okay, things are going to be open. You can buy Disney here. It's always going to be a little expensive. It commands a premium. It's Disney. So again, of those three, I would say Amazon, Disney, and Netflix. I didn't throw Apple in there. You know, it's my favorite. So I didn't even have to talk to that. So, all right, that's what I have for you for the content providers. Again, I personally staying clear of Netflix myself. All right, over to the opening trades there. We'll hit these for the person who just popped into the room. I don't love any of these. I said this earlier, BNGO or ISRG, long BNGO has already failed, and then mid and Mara shorts. Give me a second to set up for the open. Good morning, everyone. Welcome to the On Time On Target play of the day. You have 4 screens in front of you on the TD Ameritrade ThinkPipes platform. First of all, on the left, you have a 1-minute chart on the SPY. The futures are in the red a little bit. We have 1 long and 2 shorts. Here's the opening bell. All right, we have ISRG long, that's Intuitive Surgical on an earnings beat. You see it's not quite gapping up to where we like it as far as our 5 to 10% window. The 2 shorts, we have MIDD, which I don't know what they do, but they're part of a merger that's been selling off. And the last one is the MARA, which is Marathon Digital. Again, I don't necessarily know what they do, and there's no headline to go with this either. So I'm a little leery to take either of these shorts, but we'll watch them. Maybe we get an entry, maybe we don't. I do like the fact that MIDD is backing up here. That's probably short covering. So we might get an entry here that I didn't anticipate earlier. So let's look at that. This is a pretty healthy move up. So we want to high of the day 163. That would mean our entry point is called $1.50. Below that would be 161.5. Let's do this. Let's take this short. Oh, now we can't, because look at the high of the day, just moved up to 165. All right, that's gonna be too big of a move here, because by 165 we'd be already at the entry point, and I don't think you can do that. Obviously, ISRG is not working for what we want. Could we take it long here? Boy, that'd be tough with a $10 stop. 820 low would be 830 out at 860. Just the math of this is not on our side. So tough to do. Marathon, yes, we like when things back up. Yes, it's got the volume. So 31.30 cents would be 31.60 be your entry. All right, let's look around a little bit more. I had a BNGO long. Again, that was when it was here, was when I was doing my research earlier. I think it was down here actually. So it's pretty much failed from there, and it's actually in the red now. And again, no story to go with it. Let's look at the other shorts that I had written down on my paper that I didn't share with you. OBLN. I didn't catch what OBLN is. I want to say it was a medical name. Obalon Therapeutics, minus 6%. Again, small price point. I want to say this is an Indian gene firm, if I remember right. Don't really have the volume to be able to take that. eBet. I don't know why eBet is selling off. Again, it's an esports name. Esports Technologies. Ran up big yesterday, obviously. I guess if you zoom out, it's probably just selling off here after this big run up from 18 to 25 today. So that's kind of settling in. You know, that would be a fill the gap sort of scenario. So not really what we trade, but that's coming in. All right, Marathon still climbing higher here, so can't really get in on that. 32 minus 30 cents would be 31.90. I don't think it's strong enough to take that. All right, and the last one, YVR short, which I don't remember what YVR is either. Liquid Media Group. Strange name. and stocks going lower. Not a whole lot of volume here, so I don't think there's really any way to trade that. But it did meet our criteria. So, all right, excuse me, no trades for today. Let's zoom out and take a look at what's going on in the bigger picture. Moderna up almost 4% there. VIP Shop up 1%. So not too many names in the green here. AV is a drone maker. Abbott Labs, you're familiar with. Pfizer, been buying some Pfizer for folks. A little bit of a safer name, nice 4% dividend and a decent looking chart. Appears to be going higher. Blackstone, of course, is always a favorite. Nice big distribution that it pays out as the largest private equity firm out there. DraftKings about even, so not too many names in the green here. Let's look at the red. There's your Netflix. So actually it was down more earlier, so it's kind of bouncing up from that. Let's take a look at put that in the chart while we're talking. So if you are inclined to buy it, Kramer was on saying if it gets to 490, buy. So there's the earnings drop from 549 down to here. So it looks like it's getting bought this whole time, basically. So again, it's in the book. Obviously, that's why you're seeing it here. It's Netflix. That's more of an I believe kind of stock. So Mind Medicine coin is off 381. Let's look at coin. Even though I got an upgrade this morning, I said, is it going to hold 300? I think it does. Now it's down at 309, right? So maybe it does, maybe it doesn't. If you remember, Palantir traded sideways for 6 weeks. So you have to, if you're in Coinbase, you have to just grit your teeth and bear it until earnings. We have earnings. GBTC, same sort of thing. I think GBT is going to be fine. Even though it's stair-stepping down here to 45 or so. Again, I was saying as a buy below 50. I still say that's a buy. But if you have a bunch of it, don't add here. Just keep what you got. All right. None of the other big names necessarily moving too much here. All right. Let's go over to preferred stocks, then we'll close out for the day. All right, preferred stocks are kind of the middle ground between common stock, which is equity in a company. You're a part owner of the company. That's why we like it so much, right? So ownership of the firm, where of course if you have bonds, that is you're loaning money to the firm. So if you have Apple stock, you are part owner of the firm. If you have an Apple bond, that means you have taken your cash, loaned it to them, and they're going to pay you back. They pay you a coupon every 6 months. At the end of the term of the bond, they give you your money back. So very kind of clear lines between the two. A preferred stock acts like both. And some people will say that you do have the best of both. I tend to say you have the worst of both, and that's why I stay clear. I don't know when I would necessarily use this from a total return perspective, because I think I would just either be in the debt game or the stock game. But in a portfolio protection / income generation role, I do think there is a role because it shoots the gap. Kind of sits there right in the middle. You're not going to have voting rights. You do have a higher claim on distribution. That's if the company is going bankrupt, but you should not have either if the company is going bankrupt, right? So I laugh at that. If you're a buy and hold forever and you don't ever sell, then that's a consideration. But otherwise, if a company starts going down the tubes, you need to sell or sell your stock, get out of your bond before you take the bankruptcy ride, right? That's assuming you're paying attention. In the event of liquidation, we don't care. We're already out, right? I'm not going to stick around for that. Enhance its appeal. Generally, when you buy these things, kind of like a bond has a par rate of 100, right? So when you see any bond priced, if it's over 100, then it's worth more than it was when it was issued. If it's less than 100, then it's worth less than it was when it was issued. So you can kind of judge it off of that. Preferred stocks, for some reason, are issued at $25. So that gives you that, if it's above, same sort of math, whether it's above or below 25. They do trade on the open market. So it's a little easier to move in and out of preferred stocks than it is truly over into the fixed income. When you can move in and out of individual stocks on your app, right? Just by putting in the ticker, buy, sell, limit, market, whatever you want to do. You put it in there and it fills your order or it doesn't, right? If you go market, it's going to fill it at whatever whatever price is available to at the time. And they have to do best trading, at least Schwab and TDA do. If you get off on Robinhood and some other platforms, then they can peel some pennies there off you. But as long as you stay with the big names, you're getting the best price available to the entire world at the time you put your order in. However, if when I go to buy and sell bonds, it's very time intensive. I have to go through actually a bond desk. I have to manually put in these orders. I have to manually search through all these screeners, and then I have to type in the QSIP, the 8-digit or whatever QSIP that is for each bond. If you've seen these in your portfolio, then I have to put a buy, and then that goes out, and then that gets, it's not the same process. It is much longer. Well, preferreds actually trade on the open market, so you can pick them up and sell them pretty quick. It does pay the big juicy dividend, so that's the upside really. But if I'm buying a preferred, I'm probably holding it unless the company starts going down the tubes. So, all right, voting rights, no. Some just like some bonds are callable. You can have callable preferreds and convertible. Some of these preferreds automatically convert into shares of stock later on. Again, depends on how they're designed. It's kind of financial engineering. Well, it definitely is financial engineering. So that's why I kind of don't like them as much. So anyhow, you really probably won't see these in your portfolio until we start hitting that major headwind, where I think, the stock market might trade sideways for a year or so, or 2 to 3 years if we get to that point. Not calling that, I'm saying this is an instrument you would use in that situation to protect the capital that you've got. So, all right, that's all I've got for you today. Thank you so much for checking in. Thank you for being active in the chat there, Apex. And who killed Sarah from Mexico? Huh? I have to check that out, right? So, all right, you guys have a good one. We'll see you back tomorrow. Bye.